Everyone ready? We ready? We ready? Ready? And that's all? Okay. Here we go. The Committee on Insurance and Financial Services shall come to order. Mr. Clerk, will you please call the roll to establish a quorum?
Representatives Carter,
Present.
McFall,
Here.
Coleman,
Here.
Stone,
Here.
Breen, Rogers,
Here.
Scott,
Present.
Young,
Here.
Fitzgerald,
Here.
Grant,
Here.
Harris, Markkinen,
Here.
Bazat,
Here.
Aragona,
Here.
Bruck,
Present.
Nair,
Here.
Smith.
Present.
Madam Chair, you have a quorum.
Thank you. Now we need a motion to adopt the minutes from September 28th as printed. Representative Scott moves to adopt the minutes as printed. Hearing no objections, the minutes are adopted as printed. First up today is a vote vote reconsiderations of Senate Bill 356 and 357 introduced by Senators Hertel and Kavanaugh. We don't have any testimony. We need a motion to reconsider the vote on Senate Bill 356. Representative Rogers moved to reconsider the vote by which Senate Bill 356 failed to be reported on September 28, 2003. Mr. Clerk, can you please call the roll?
Representatives Carter,
Yes.
McFall,
Yes.
Coleman,
Yes.
Stone,
Yes.
Breen, Rogers,
Yes.
Scott,
Yes.
Young,
Yes.
Fitzgerald,
Yes.
Grant,
Yes.
Harris, Markkinen,
Pass.
Bazat,
Pass.
Aragona,
Pass.
Bruck,
Pass.
Nair,
Pass.
Smith. Madam Chair, you have 9 yeas, 0 nays, 6 passes.
Thank you. The vote is reconsidered. Representative Rogers moves to report Senate Bill 356 with recommendations. Mr. Clerk, would you please call the roll?
Representatives Carter,
Yes.
McFall,
Yes.
Coleman,
Yes.
Stone,
Yes.
Breen, Rogers,
Yes.
Scott,
Yes.
Young,
Yes.
Fitzgerald,
Yes.
Grant,
Yes.
Harris, Markkinen,
Pass.
Bazat,
Pass.
Aragona,
Pass.
Bruck,
Pass.
Nair,
Pass.
Smith.
Pass.
Madam Chair, you have 9 yeas, 0 nays, 6 passes.
Thank you. Senate Bill 356 is reported with recommendation. Next, we need a motion to reconsider the vote on Senate Bill 357. Representative Young moves to reconsider the vote on Senate Bill 357, failed to be reported on September 28, 2023. Mr. Clerk, would you please call the roll?
Representatives Carter,
Yes.
McFall,
Yes.
Coleman,
Yes.
Stone,
Yes.
Breen, Rogers,
Yes.
Scott,
Yes.
Young,
Yes.
Fitzgerald,
Yes.
Grant,
Yes.
Harris, Markkinen,
Pass.
Bazat,
Pass.
Aragona,
Pass.
Bruck,
Pass.
Nair,
Pass.
Smith.
Pass.
Madam Chair, you have 9 yeas, 0 nays, 6 passes.
Thank you. The vote is reconsidered. Representative Young moves to report Senate Bill 357 with recommendations. Mr. Clerk, would you please call the roll?
Representatives Carter,
Yes.
McFall,
Yes.
Coleman,
Yes.
Stone,
Yes.
Breen, Rogers,
Yes.
Scott,
Yes.
Young,
Yes.
Fitzgerald,
Yes.
Grant,
Yes.
Harris, Markkinen,
Pass.
Bazat,
Pass.
Aragona,
Pass.
Bruck,
Pass.
Nair,
Pass.
Smith.
Pass.
Madam Chair, you have 9 yeas, 0 nays, 6 passes.
Thank you. Okay. Senate Bill 357 is reported with recommendation. Next on our agenda is a testimony only on House Bill 4740. Here to testify on the bill is the bill sponsor, Representative Farhat, Sarah Ishmael, a public policy associate for Access, and Amy Zagman, the executive director of Michigan Council of Maternal and Child Health. Thank you all for coming. Are they here? Okay, yes, there's Amy. Thank you. Okay, I got it. Thank you all for coming. Please come forward. The floor is yours.
Thank you so much, Chair, members of the House Insurance Committee. I'm proud today to be here to talk about House Bill 4740, a bill that would help waive the 5-year immigrant waiting period for children in the state of Michigan, as well as pregnant people. Now, this bill is relatively important. I'm proud that we were able to do so in the budget, and this bill would seek to codify those changes. When we talk about infant mortality, when we talk about child healthcare outcomes, and even prenatal care, the access to equitable services through Medicaid is a huge, I'll be honest, it's transformational for some lives. It helps ensure that there is safe passage of that child. That helps make sure that they're detecting for failure to thrive. They're detecting for things that could set up this child for a lifetime of unfortunate healthcare consequences that otherwise could have been prevented. I'm proud to speak more to this legislation, but I want to let some of the stakeholders that are here today weigh in a little bit on their perspectives as well. And thank you all for your time.
Good morning, Chairwoman Carter and members of the House Committee on Insurance and Financial Services. Thank you for allowing me to provide testimony on the removal of the 5-year waiting period for Medicaid and Children's Health Insurance Program for lawfully residing children and pregnant women. My name is Sarah Ismail. I'm a Public Policy Associate with Access. For more than 50 years, Access, the nation's largest Arab American community nonprofit organization, has built communities and institutions that span multiple sectors with a focus on community empowerment. Access transitions people from being service recipients to fully engaged citizens, able to advance justice and equity. As a premier human service provider with 10 sites throughout Southeast Michigan offering 127 programs, we serve thousands of diverse individuals and families every day through our integrated and comprehensive program model of service delivery. And this is done for low-income and immigrant communities in the areas of health, education, economic empowerment, workforce development, civic engagement, and arts and culture. These programs serve the diverse populations of Southeast Michigan and have been the foundation of our community empowerment, moving individuals, families, and the communities from poverty to economic stability. Access strongly supports the removal of the 5-year waiting period for Medicaid and CHIP for lawfully residing children and pregnant women. As a community-based organization, Access sees firsthand what residents in Southeast Michigan are experiencing. We serve diverse clientele, particularly Middle Eastern and North African populations, with an influx of those fleeing war from Syria, Iraq, and Yemen. Access serves residents who would be impacted by this daily, and I'd like to share a story from one of our clients. I've been living in the U.S. for almost 4 years, and I have a very hard time getting covered by insurance. We're a family of 6 and are low income, and my husband cannot work due to his critical illness. Due to our immigration status and not yet completing the 5-year time frame to receive benefits, we had a tough time with medical bills and have not been able to pay them off. When we first moved to the States, we stayed in New York for a year and received all types of benefits from the Department of Health and Human Services. But when we planned on moving to Michigan, everything changed and the benefits we had in New York were not available. My husband has a critical condition where it limits his ability to work and is not eligible to enroll in insurance from his work because he's a part-time employee. We were told about free clinics that offer free care to uninsured people, and that's our go-to place when we feel ill. We try to limit ourselves with visiting the ER or urgent care due to the bills that we cannot afford. Unless we encounter an emergency and need to be seen as soon as possible, we have no other choice but to seek medical care from the emergency room. Chairwoman Carter and committee members, I urge the committee to support the removal of the 5-year waiting period for Medicaid and CHIP for lawfully residing children and pregnant women. Thank you for your time.
Good morning, everyone. I'm Amy Zagman. I'm the Executive Director of the Michigan Council for Maternal and Child Health, and we appreciate your consideration of House Bill 4740. As Representative Farhat said, there is funding included already in the FY24 budget to implement this. It's my understanding that the department is working on policy and IT changes, but it's also important to amend the Social Welfare Act to solidify our intention to provide full coverage to all individuals who are pregnant or under the age of 21, residing here legally and eligible otherwise for Medicaid and My Child in our state, regardless of how long they've lived in our country. Since 2010, the Federal Centers for Medicaid and Medicare have given states an option. It's called the Immigrant Children Health Improvement Act option, commonly called IKEA, to waive this 5-year waiting period and receive the corresponding federal reimbursement for children and pregnant individuals. We're pleased to finally see Michigan taking up this option. We're one of only 15 states that currently does not exercise the option. And as I said, the funding is already in the budget to do so. Our membership is comprised of hospital systems, statewide organizations, and local entities that have a mission to shape policy and legislation to improve maternal and child health outcomes. It's why we care so deeply about this bill and making sure that everyone has coverage. In our society, coverage often equals access, and our members know firsthand that limiting or denying coverage to vulnerable populations has negative impacts. It leaves individuals uninsured, and often, or with really just basic emergent services only coverage that is very limited. Patients have all of the outcomes that Sarah talked about. They delay needed care, they increase utilization of higher intensity services like emergency rooms. They struggle to find providers that will even accept them. They miss out on critical preventive services like immunizations, prenatal care, well child visits, and we know that those are effective in controlling illness and preventing complications. They incur medical debt or limit services because they cannot pay these high out-of-pocket costs. The legislation and the removal of the waiting period will give full Medicaid coverage to an estimated 3,000 to 4,000 more children, including all of the things that are included currently in Medicaid coverage: preventive health, behavioral health, special health care services, dental care, and more. We recognize these components as necessary to support healthy development and well-being. Children in our state who have recently immigrated with their families have the same needs as children who are born here. Many of the Medicaid policy gains we've achieved in the last several years to enhance maternity care, namely things like extending Medicaid coverage to 12 months postpartum, coverage for doula services, coverage for non-invasive prenatal testing, those will all be available under this policy to individuals who previously had been limited to something that we call maternity outpatient medical services, or MOMS coverage. Again, emergency services only coverage is extremely limited and doesn't really address the pregnant individual, rather just addresses conditions that can be associated with the unborn child. That's the way that coverage is termed. That coverage expires 60 days postpartum. So one of our major interests is obviously with full Medicaid coverage, those individuals will be eligible to 12 months postpartum. Many of you have been critical supportive partners of extending Medicaid coverage to 12 months postpartum because we understand the impact that has on reducing maternal mortality and morbidity. As we focus on growing Michigan, our members encourage your support today for House Bill 4740. We believe it will send a strong message to women, children, and families looking to make our great state their home, that we want them to have coverage and access they need to health services and supports necessary to grow and thrive. I'll just also mention there's a ton of really good resources from some of our advocacy partners if you're looking for more information about sort of the history of this and more information. The League for Public Policy has published a wealth of information about this and also some options that we could do to even extend coverage to that remaining population that receives only emergency services only coverage. So I'd be happy to answer questions. I'm sure we all would.
Thank you very much. Thank you, Representative Farhat, Ms. Ishmael, Ms. Zagman. Your testimonies were very inspiring. Do we have? Yes, we do. Representative Rogers.
Thank you, Chair. I'm very supportive of this legislation. I sponsored it last term. I just have one question. Could you give an update on about either way you want to frame it, either how many people have been left out without this legislation or how many people are currently, however you want to phrase it, but what would be that delta, that change?
Thank you, Representative Rogers, and thank you for your leadership on issues surrounding maternal health. It's anticipated to be about 3,000 to 5,000 individuals that are currently left out of service that would gain coverage and be eligible to start receiving benefits.
Thank you. Sounds like a win-win.
Thank you.
Representative Aragona.
Thank you, Madam Chair. Thanks for being here, everyone. My question is, when we remove something from law, it's always good to know why it was there. So can any of you speak to, A, why there was a waiting period, and B, why it's 5 year, why not 10 year, why not 1 year? What is the purpose of the current law and how it sits?
So, and Amy, you can speak to this a little bit more as well. So the way it's currently written is that the federal guidance says that you have to wait 5 years. However, for children and pregnant people, there is a waiver that the states can acquire to immediately begin coverage for them and exempt them from that 5 year waiting period. But that's something that the state has to do in order to begin enrolling individuals outside of that 5 year frame. We did that through the budget initially, earlier this year through boilerplate. This would just codify that and just make it clear that we are accepting individuals ahead of that 5 year waiting period, and specifically in this case, children and people who are pregnant.
Okay, so that's the mechanism to set it up. I understand that, but why is there a waiting period in the first place, and why is it 5 years?
So I don't know that I can get in the head of federal lawmakers and why they imposed a waiting period. A waiting period was imposed in 1996, I think, in an effort to control costs. And I don't know that I have done enough research to go back to sort of the legislative debate that happened around that time, but that's when the 5-year waiting period was established around many federal benefits or many public benefits, including Medicaid. In 2010, recognizing that it was denying pregnant individuals and children access to much-needed preventive care, the option that I talked about was created, and since that time, 35 states have taken up the option to make sure that individuals are covered that fall into the specific populations. There will still be a 5-year waiting period for other individuals.
Representative Fitzgerald.
So just to be clear, there wasn't any new federal guidance on that 5-year waiver, like that we the state could waive this 5-year period. That this has been available, but it just happens to be that now we're making the opportunity to actually waive that 5 years. Correct?
That's correct. The option has always been there for the state to take up a waiver for children and people who are pregnant, and so this is us just picking up that waiver.
Any other questions? Hearing none, I'll read in some cards. In support and wishing to speak, Parker Fisher. Okay.
Maybe he doesn't want to speak.
Okay.
He's shaking his head.
Okay, thank you.
That's wrong. The other bills.
Excuse me, I'm so sorry. Okay. Let's see, we did have Amy speak. Not wishing to speak? Okay, I can read them now. All right. Not wishing to speak and supports the bill, Sharday Burton, Michigan Department of Health and Human Services. Wishing to speak?
Amy.
She already did. Already spoke, Amy Zagman. And not wishing to speak and supports the bill, Rachel Richards, Michigan League for Public Policy. Okay, very good. Next on our agenda is testimony only on House Bill 5057. Here to testify for the bill is the bill's sponsor, Representative Stone. Oh. And the Department of Financial Services. There you go.
Thank you, Madam Chair. The bill I've brought you this morning is House Bill 5057. It would amend the insurance code to allow disabled veterans to waive coverage for work loss benefits under the personal protection insurance benefits if they would not be able to receive that coverage under the Act. Currently, the insurance code provides that payable personal protection insurance benefits include benefits for work loss due to loss of income from work. An injured person for work the individual would have performed, if not for the injury, for up to 3 years after the date of the accident. This act allows individuals who are at least 60 years old to waive coverage for the work loss benefit by signing a form provided by the insurer. If they would not be able to receive them, and requires insurers to offer a reduced premium rate for those who sign the waiver. The bill would add the option for a person who has been determined by the United States Department of Veterans Affairs to be permanently and totally disabled as a result of military service to be entitled to veterans benefits at the 100% rate to waive coverage for work loss benefits under the same procedure and conditions available to those 60 years or older. A constituent in my community brought this to my attention. And we're happy to work with DIFs and find that this is a loophole that we can help close and help save money for our residents.
So thank you, Rep. Stone, for giving a good overview of the bill. So, and thank you, Chair Carter and members, for allowing us to speak on the bill today. So We appreciate Rep. Stone's coordination on this issue. As she said, this was a constituent case that she brought to our attention, and we were able to assist them with drafting the bill, and the department supports the bill. So just to sum it up, we see this as another common sense way for disabled veterans to save on auto insurance by allowing them to essentially stop paying for benefits in which they cannot access. So it's just one small way that we can make the law more flexible to allow this group to have the option to reduce what they can pay on auto insurance. So with that said, we would be happy to take any questions from members on the bill.
Representative Bruck.
Thank you, Chair. Thank you, Rep. Stone, for bringing this. This is definitely a very important issue. My biggest question is, why the age 60? So obviously, I have some constituents. This has been brought up. This is an issue that I realized even before I ran, that was occurring to 100% disabled vets. Why age 60?
Well, that was established under the auto no-fault insurance reform. And so this would peel that back for this population.
It says 60 or, under.
That's how it currently reads, yes.
Yes.
Okay, so under 60 can't, okay.
So, yeah.
Please forgive me for that
No
then.
worries.
I'm reading it as only 60 or older. So this applies to everyone under 60. Got it, Roger. Okay, now I'm red-faced.
You don't have to ask Diffs about the previous.
I was so happy until I seen that and I was focused on it. So I appreciate you bringing
Thanks
this
for
up.
the
This is
clarification on that.
I'm not 60 yet. Yes.
I'm good with this.
No, we do appreciate it. This has
Yes.
definitely been an issue and one of the chief complaints from the veteran world after the auto reform. So thank you.
Absolutely.
Thank you. And next we'll have Rep. Rogers.
Thank you. First, I want to really compliment Madam Chair on the past few weeks of committee. I really appreciate the deep dive from stakeholders on a very important topic that is near to both your heart and mine and many of ours. And so I really do appreciate you taking the time and care with this and taking up one of the fixes or tweaks, if you will, that we've been talking about. I apologize. I am not an attorney, but if you could explain a little bit more in detail, and the chair can direct this to whoever's best, but it is so I think I support it in concept, but it's just a little bit confusing. So I'm now understanding with the clarification of the past question about it's for under 60. I understand that, but are we only talking about stopping paying for the premiums, or is there a piece about where their care is? Can you explain a little bit more in the legal terms?
Yeah, I can take this question. So it's specifically for the work loss portion under PIP, the personal injury protection. So there's a portion of PIP that pays for the medical expenses, but this portion is specifically talking about work loss, which is the coverage for income that you would have had if.
So somewhere along it was mentioned that there's no longer a pay on premiums. Can you restate that? I'm a little bit confused by that.
So what this would specifically allow, so since they're disabled veterans and they have the designation from the U.S. Department of Veterans Affairs of being disabled and since thus unable to work, that they're essentially paying for benefits for that work loss that they would never get. So this would allow them to opt out of that and kind of save on those costs.
I see. But there's, just to clarify one more point, so they're still paying their auto insurance premiums.
Yeah, so other components of the premium.
Thank you. That's where I was getting confused. So I appreciate that clarification. And then this is more for the bill sponsor. What would you think about any kind of expansion for other populations than just veterans? Because there's other, obviously, disabled populations.
I'd be willing to have that conversation. But this is specifically on this really niche population that this speaks to.
Thank you so much.
Thank you, Rep. Rogers. Again, Rep. Bruck.
Yes, thank you, Chair. I just want to comment on the last comment that and I hope you're okay with me answering that. In the veteran world, a veteran that's 100% disabled cannot opt out of the PIP coverage. Any other driver in our state can opt out of the PIP coverage, correct? Except for if you're 100% VA covered by the VA will not allow you to opt out of that option. So that's where, in our district, I've met numerous veterans that after the law their insurance went up because they could not opt out of PIP at all. And so they actually were paying higher premiums. So,
Thank you, Representative Bruck, for that insight. He is our person that's in the military, our veteran. Thank you. Anyone else? Okay, reading in cards now. Not wishing to speak and supports the bill, Alex Hausman from the Big I. Not wishing to speak and supports the bill, he's already spoken, Parker. Not wishing to speak and opposes the bill, Michael Van Beek, Director of Research, Mackinac Center. Okay, this is wonderful. Now here's the part I was waiting for. But before we begin this presentation, I want to share a personal story. Claude, my brother, and Ronald, my nephew, they were impoverished. Claude had a menial job that barely made ends meet. He took his nephew, my nephew, with him to help with the chores. When the torsion bar snapped on their vehicle and it went airborne into an embankment, it killed them both. The accident report was cited that the driver was uninsured and driving a poorly maintained vehicle. Claude, like so many Michiganders, could not afford insurance or to fix the vehicle. I tell this story because auto insurance must be affordable and available to all Michiganders. As we continue to understand the nuances of auto no fault, we have a presentation today from the Michigan Catastrophic Claims Association. Here today is Joseph Ephart, and Assistant Director, and KJ Miller, General Counsel. Thank you both for coming. Can you please come forward? The floor is yours. And this is MCCA.
Thank you, Madam Chair. Can someone tell me how to get our presentation back?
It should be pulled up, just so you can hit escape.
Thank you.
Well, thank you, Representative Carter, and everyone else for inviting us here today. We're happy to be here. Let me start out by asking the question: What is the MCCA? The MCCA is an unincorporated private nonprofit. That's important to remember. We're a nonprofit. It's an association that reinsures auto injury medical costs over a specific amount. That amount currently is $635,000. It gradually increases over time. When we were first created back in 1978, it was $250,000. But as inflation happens over time, it gradually gets bigger and bigger. So why were we established? Well, we were established in 1978 because insurance companies couldn't buy reinsurance in the private marketplace. Reinsurance companies were reluctant to reinsure, unlimited lifetime medical benefits. That's a lot to take on. So, who are our members? Well, our members are any insurance company that writes auto no fault in the state, and currently there are 378 members. And by statute, they have to be a member if they write in the state. So the idea behind the MCCA is it spreads the cost of catastrophic claims throughout the industry. The concern was that a large claim could take a small insurer and just wipe them out of the market. And we wanted to keep competition. The legislature at the time wanted to keep competition, so that was the idea: spread the costs throughout the industry. So. Let me also say there's no contractual relationship between the MCCA and policyholders. The relationship that the MCCA has is with its member insurance companies. The MCCA doesn't adjust claims. The insurance companies handle the claims, And that remains so throughout the life of a claim. Even when the MCCA bears the financial responsibility for the claim, the carrier is still the one that's handling the claim. We're a reinsurer. So, who oversees the MCCA? Well, there are a lot of people that have their eye on this, and that's good. So let me just say this: there are 5 member companies that are appointed by the director of the Department of Insurance and Financial Services, and those 5 members have to represent 40% of the market, and that's according to the statute. That's built right in. So, yeah. Also, DIF's director is a non-voting member of the board, and just whoever the director is at the time is always a member of our board. And they attend our board meetings. Either the director or a designee of the director is at every board meeting. So in addition to the board, the MCCA has several committees that assist us in doing our day-to-day business. We have an actuarial committee, an audit committee, a claims committee, communications committee, a human resources committee, an investment committee, and an IT committee. Representatives from across the insurance industry serve on these committees. And by the way, neither these representatives nor board members receive any compensation for their time or their expertise. So also, DIF's financial analysts monitor and examine the MCCA, just like they would any insurance company in the state. We have a staff of 51 people that handle our day-to-day operations. And we have a plan of operation, which is sort of our playbook on how we go about our business. That's posted on our website. And it provides detail on how we execute our statutory duties because we are governed by a statute. MCCA transparency. So the MCCA, as I said, has the same financial reporting requirements as insurance companies have. As I said, DIFS appoints members to the board, and the director sits on the board. DIFS also performs a financial audit of the MCCA every 3 years. And in the last examination, DIFS had an outside independent actuary review the MCCA's reserves. After that audit, no adjustments were made to the MCCA's financial statements, and none were recommended. The MCCA also has an independent audit conducted every year. Recently, we've been using Plant Moran. And our financial statements and audits are published on the MCCA website, and that website's on the slide there. I have a copy with me today of our most recent financial statement, if anybody wants to look at it. Every stock and every bond we hold is detailed in here. There are no secrets about what we're doing with our money. It's all in here. So also starting September 1 of 2019, following the major no-fault reform, the MCCA was required by statute to submit an annual consumer statement. And we give that to the House and the Senate, and we provide all the information that's detailed in the statute. I think there are 18 different categories of information, and we pull all that together and submit that with the consumer statement, and that also is on our website if anybody wants to take a look at that. And there's also a wealth of other information that is on our website, claim statistics, historical assessments, all those sorts of things. I think it's interesting. Maybe I'm alone in that. I don't know. So what's the financial status of the MCCA? As of June 30, we have our fiscal year ends June 30. So as of June 30, 2023, we had assets of $21.6 billion, liabilities of $23.7 billion. So that resulted in a deficit of $2.1 billion, which is $259 per car. We have $23.2 billion in loss reserves, and and that's a term that some of you know maybe not everyone knows, but a loss reserve is an estimate of an insurer's liability for known claims it will have to pay. All right? So we're not a pay-as-you-go entity. We're required to reserve all future medical payments for currently injured persons. What does that mean? It means that we have to collect now the money that we're going to need to pay current claims in the future. And let me explain how that works. The MCCA has a permitted accounting practice. So in determining our loss reserve, we use that permitted practice, and we get this from the Department of Insurance, and it allows us to discount our reserves for future investment income. So we don't establish reserves at full value. We take a credit in our reserves for all the future anticipated investment income we're going to earn in the future on the money that we have now. So without that permitted practice, the deficit would be $50 billion if we had to have all the money now to pay those claims, and we had to have it in the bank ready to go. And that would be $6,600 per car. But because of this permitted practice, we're allowed to have less because we anticipate that it's going to grow over time. So if we look at our reserves as undiscounted, in other words, not discounting them to present value, it'd be $47 billion. And that would represent the actual dollars that we estimate we'll have to pay out for all of our current claims over time. And the offset for future investment income is $44.9 billion. That's what we think with the money we have now, it's going to be $44.9 billion over time. So then we take that discounted reserve, and that gives us the $2.1 billion that I mentioned earlier as our financial position right now.
Good morning. Now it's my turn. I have some of the more interesting subject matter to discuss.
It's a matter of opinion.
And thank you all for inviting us here and for listening today. The cost components of the current MCCA charge include if you select unlimited PIP benefits, because now after reform, drivers have a choice. If they continue to select unlimited PIP benefits, there's a $122 charge per vehicle, which consists of $74 to cover anticipated new claims and $48 to cover the deficit that Joe was discussing, based on a 15-year amortization schedule. That 15 years is in the statute. We're allowed to take that deficit and split it up over 15 years and then charge per vehicle. The anticipated new claims are those that are anticipated during this fiscal year. So we're looking at July 1st of 23 to June 30th of 24. If a driver selects a different PIP benefit other than unlimited, they're only charged the $48 to cover the deficit that's based, again, on that 15-year amortization schedule. The statute does require all insureds to share in the cost to recoup the deficit, but all insureds also receive the refund when there was a surplus. So everyone received the $400 that was provided back to insureds, and they all also participate in recouping the deficit. Here are some statistics as of the end of our most recent fiscal year. So since our inception in 1978, we've had 47,898 claims reported. 15,712 of those claims are still open. We have reimbursed, since our inception, $22.4 billion to cover claims paid by carriers, because we are a reinsurer. The carrier pays first, and we reimburse the carrier. In our last fiscal year alone, $1.2 billion was reimbursed. Our costs average approximately or 91 million a month. And because many injuries, unfortunately, are suffered by younger people, their care will be funded by the MCCA decades into the future. Attendant care is 51% of our payments, $586 million, and 62% of our reserves. So it's essential that we, and the insurance industry, and you, consider the cost of attendant care and the cost of residential care facilities in order to understand the costs of the MCCA. So this pie chart is available on our website as well if you'd like to spend more time looking at it. It explains how we spend our money. The entire right side of the chart, those three largest segments in green, yellow, and blue, together are the largest part of our reimbursement. And those are all long-term care costs. They're agency attendant care, family attendant care, and residential care facilities. The agency attendant care is 21%, the family attendant care is 14%, and the residential care is 19%. So those three cost drivers alone are 54% of the money that we reimburse. In addition to attendant care and residential care, we have other long-term costs like prescriptions, rehabilitation costs, occupational therapy, physical therapy, and case management. We reimburse all PIP benefits under the statute that are reasonable and necessary. But as you can see, most of them are far smaller. You can see that home purchases or modifications are only 1%. And this slide shows, again, that a large percentage of our claims involve young people, which is a very sad and concerning statistic. But the money, it again supports what we're telling you in terms of that the money we collect now has to fund the care needs of injured people, catastrophically injured people, for their entire lives. We're still reimbursing care today for people that were injured in 1978, the year that we were created. So that's 45 years ago. We will be funding care for people injured today 45 years into the future. A large number of the people who are injured now, we will be reimbursing for decades. And because we are the Michigan Catastrophic Claims Association, if you know who we are, we see all catastrophic claims. We've developed expertise in the care needs of those who suffer the most serious injuries. And we share that expertise with each of our member carriers to assist them in making sure that everyone is provided the benefits that they need. And with that, we are open to questions.
Okay. Representative Markkinen.
Thank you, Madam Chair. Thank you both for being here today. We really appreciate it. Do you reimburse all the way back to $6.35 or $1, or just to the $6.35 that the insurance?
We reimburse after the insurance company has paid out $635,000.
Okay.
After that, as I said, they continue to handle the claim, but we bear the financial responsibility. They submit requests for reimbursement to us. We process those and make the payments to the insurance company.
All right. Thank you.
Thank you. Representative Bazat.
Thank you, Madam Chair. Thank you for your testimony. Very complicated issue, both for DIFs and for you, so I appreciate that. What technology or software do you use to predict the cost of catastrophic injuries?
So we have an actuarial committee
Okay.
Which consists of credentialed actuaries. I think there are seven or eight on that committee. We also have an independent actuary that we use, the Milliman actuarial firm. They study it. They make recommendations to us. The committee debates those. The Department of Insurance attends the actuarial committee meetings, and that's how we arrive at it.
Okay. Madam Chair, can I have one quick?
Yes, please.
Just from a curiosity standpoint, you have a deficit of over $2 billion. So that's kind of concerning. I always thought you had like 22 or 27 billion in the account. So you were, because the 55%.
We, if I may.
Okay.
We do have whatever that number is, 21, 22
Okay.
billion. But that money's accounted for. As I said, that money is earmarked for injured claimants, right? That we need to have that money, and that money needs to grow over time in order to have enough to fund their care needs.
Okay.
Long into the future. So it's not like I said, it's not a pay-as-you-go system. That money is dedicated to people already.
Well, the concerning thing for all of us here moving forward is especially from the young kids, they think they're infallible, nothing will ever happen to them. As you know, you guys are well aware of this. But so they can reduce their costs if they get involved in a catastrophic injury claim. They're only going to be paid at 55% once they go to attended care. Is it correct? And that's going to, how do we end up paying for that down the road? How do you end up paying for that?
Well, under the current statute, it's 55% of the charge description master from January of 2019. That's adjusted for CPI each year. And what our actuaries will do is they take those estimates and they put them into the actuarial analysis, and that's how they come up with how much money do we need to fund those payments over the anticipated life. I mean, look, what actuaries will tell you is that whatever they estimate, they're wrong, right? Because what's inflation going to be in 50 years? What's the stock market going to do over time? What medical advancements do we have? That may cost more or may reduce cost. I mean, there are so many variables. So that's why when we talk about like a loss reserve, it's an estimated loss reserve. It's they estimate that we're in a deficit position. That's the best we can do when you're looking out that far into the future. I mean, these are really long-term costs with a lot of variables.
Thank you. And I want to mention to the committee, we do have a couple of actuaries in the schedule to come and talk to us. I'm covering all bases. Okay. Representative Grant.
Yes, good morning. Thank you all for being here and sharing some information. I have a question, and I may not frame this correctly, so please, feel free to clarify, because that's what I'm looking for. It's my understanding that detailed information on your financials are not able to be FOIA'd by the public. So there's some type of information that actually is not available when it comes to financials. And I just, if you can clarify that for me, maybe that's incorrect, but some constituents have shared that with me, and I just wanted to make sure I was clear on what is publicly available, what can be accessed, and if there is something that cannot be accessed.
We're an open book. I mean, it's all here.
It's all there?
Yes.
Okay, thank you.
If I could clarify a little bit.
Yes, please.
We are not subject to FOIA.
Okay.
That part is correct. But on our website is all.
Everything is there. Okay, thank you.
Thank you, Rep. Grant. Rep. Nair.
Thank you, Chair, and thank you for coming here. I'm just looking for a clarification in terms open claims. Could you specify, is that ongoing payments to people that long-term care, or is that you've already settled those?
An open claim, it means that
Ball.
the person is either still treating or is likely to still treat.
Thank you. Rep. Fitzgerald.
Thank you so much, Madam Chair. So I'd just like to revisit, if you can leave this slide up, I'd just like to revisit, what is the MCCA? And you go through, these 5 bullet points here, including that there is no contractual relationship between the MCCA and individual drivers. Actually, if you can go back to that final slide, that's really where I want to kind of dive into this language here, where it reads that the MCCA has developed expertise in the care needs of those who suffer the most serious injuries, and this expertise is shared with each of its members to assist them in providing to claimants the benefits they need. Is MCCA acting as a patient or care advocate? Are they recommending care? Are there, the way that this reads and versus the actual mission and role of the MCCA this seems very broad form and seems to message that the MCCA has some sort of hand in directing or determining care of claimants.
I'm sorry that it was worded in such a way to lead to that miscommunication. We do not direct care. We have a very experienced staff that has worked in the insurance industry for many years, usually before they come to the MCCA. And they are divided into injury expertise categories. So when an MCCA examiner looks at a claim, they have the type of knowledge of what those injuries that person has suffered usually require. And they may be able to talk with the adjuster at the insurance company and provide some of that knowledge that they have of different resources that are available.
So would that impact potentially the reserve that a carrier sets on a claim? Would that have to do with the opportunity or the understanding that this would be an extended period of time that this care would be required? So it's more data about the claims than it is the direction of care.
You are absolutely correct. Thank you.
Thank you, Rep. Fitzgerald. Rep. Aragona.
Thank you, Madam Chair, and thank you guys for being here. My first question is, I just want to clarify because I guess it's a point that I didn't quite understand. If there is a catastrophic claim, the auto insurer pays out the first $635, then you guys pay everything after that, no matter the cost, correct?
We reimburse.
Reimburse.
We reimburse the insurance company.
Okay.
As high as it goes.
And is there any challenge process? I don't think that was a proper cost, or you just kind of nope, this is what comes in, this is what we're reimbursing.
We have discussions with our carriers.
Okay.
They will reach out to us and say, is this consistent with what you're seeing? Discussions like that happen all the time.
And there are certain expenses that a carrier pays that we don't reimburse. We don't reimburse for their legal costs, for example.
Sure. Okay, thank you. One more, Madam Chair, if it's okay.
Yes, Rep. Aragona.
Can you guys turn to the pie chart for me? So this is your basically your cost analysis of what's coming out of the fund, broken down by type of cost and percentage, great. Up at the top it says wage loss and then pay code unknown. Is that pay code unknown just kind of a catch-all of other things you might?
Yes.
Okay, that was more edification. And then your biggest 3 costs: attendant care, agency, attendant care, family, residential care. Do you have any type of data on breaking that out by wage hour at all? For instance, there's not one person being cared for by one family member, and that is the full 18.78%, right? How many families, how many hours, that type of thing? Is there a way to break that out by number of claims and number of hours?
Yes.
Yes.
Okay. Yeah, if you can get that to me in the future, I'd like to take a look.
Are you just curious about family attendant care?
I'm curious about all 3.
Okay.
Thank you.
Thank you, Rep. Aragona. Rep. Brock.
Thank you. Thank you, Chair, and thank you for being here. We need like 3 hours to talk about the MCCA, I'm just saying. But I do own a home care company that was greatly affected by the change in the cut in rates for attendant care. But that's not really my question. The question is the MCCA, does it cover the uninsured driver or passenger on the road? I guess it kind of goes to what is the requirements for coverage? Is it
So at this point in time, based on reform, an insured has to choose unlimited PIP coverage in order to be covered by the MCCA.
okay? And if there's an auto accident and two cars hit, one car is insured, the other car is not carrying any insurance, does MCCA no longer cover that individual or that group of individuals in the uninsured car?
We do not cover the uninsured.
Previously, it did, though. Correct?
Previously, everyone had unlimited coverage.
Correct.
So the MCCA covered all accident victims except for there were certain things in the statute. So, for example, if you had stolen a car, you were not going to be covered. If you had, if you owned or registered a car and you had not purchased insurance, you would not be covered. That was true before reform as well.
Okay. And one last, if you're 18, like my son, and you just got your license, because I don't allow my kids to get their license till they're 18 for my own obvious reasons, but he had to pay the PIP coverage, the $48, and he never got a $400 check. Just to clarify the all.
Absolutely. If however he continued to purchase, in order to get the $400 check, you had to be an insured at that time.
Mm-hmm.
If he was an insured in the future and there was a surplus, he would receive it.
Okay. Thank you, Madam Chair, and thank
Oh,
you.
you're welcome. Representative Stone.
Thank you, Madam Chair. I had two kind of thoughts, questions to ask. So how did the 2019 auto no-fault reform impact reimbursements over the last 3 years?
Wow.
What did you say, 2 hours, huh?
The answer to that is very complicated. I had a complicated slide on that we decided not to bring because it would take too long to deal with. We'd be happy to.
If you'd like to share that, I
I'd
think
be
that's
happy
why
to
we're
share
here.
it
Yeah.
at some other time, but I think it's a longer conversation. I mean, I think costs initially, when the actuaries first looked at what future costs would be, the assumption was, this was before the Andry decision came out, that all of our current claims at that time, those future costs would go down. It wasn't until we learned from the Court of Appeals and later the Supreme Court that said, well, that you can't apply that reform to claims that predated reform. Well, so our actuaries had initially thought it was going to go down, our future cost, but when that happened, they went back up. And also in the midst of that time, we also gave, because we had about a more than $5 billion surplus, because we did think that costs were going to be lower than we had originally anticipated, we gave $400 a car, which amounted to about $3 billion that we gave back to insurance companies, who in turn passed it out to all the drivers that were currently insured at the time. So, if you look at our actuarial estimate of what our costs are, they kind of went like this, right? There was a wave to it, and I think those are probably the three biggest drivers of what our estimated reserves would be. It went down when reform got passed. It went down even further when we gave, our assets went down when we gave money back, and then when the world kind of went topsy-turvy on the industry, and they said, oh, all those savings you thought you were going to get on the older claims. And look, all we can do is model what the legislature tells us to do. I mean, we're just trying to figure out, okay, how much money do we need to fund these claims, right? We're a nonprofit. We don't get anything. We just tried to get it right. That's all we're doing.
Yeah. He gave you a much more thorough answer. I was just going to tell you there was a lot of sleepless nights trying to figure it out.
And that's perhaps the answer I expected. How many patients, individuals are currently covered by the MCCA? I might have missed that.
Good question.
So I think you're asking how many people are choosing
Claims
unlimited? Or
No. How many people are current recipients of lifelong
We have
benefits?
a little over 15,000
open claims.
15,000.
Yeah, you mentioned.
Open claims.
Appreciate that.
Thank you. And just one really quick
Yes,
follow-up.
please, Rep. Stone.
Looking at this chart of the distribution of injury is alarming. Are there factors that are being analyzed to address prevention and risk management?
That's outside our purview. We just calculate the money we need to, and we reimburse insurance companies. We're not really an advocacy group or anything like that. So.
Are there factors available, and perhaps this is the insurance industry that would address this, that are being analyzed or available from this?
Not by us.
Okay, so other sources.
Yes.
And Rep. Stone, we will get to find those other sources to answer your questions. Thank you for that. We have Rep. Young now.
Thank you, Madam Chair. Thank you, too, for being here. Just a quick couple of questions, some clarifying questions. Because one of the things you just said was trying to figure out just how much money we need. And so then I look at surplus versus deficit, and I'm wondering, I'm pretty sure it's in the statute, when you reach a certain amount of overage, you got to give it back. But have there been discussions about not doing that? Everybody likes a nice $400 check every now and again, let's be clear. But what I don't like is you give me a check and then you charge me more later. And I feel like I'm getting tricked, right? And so if you need to hold on to the money a little bit longer because of all this ebbing and flowing, somebody didn't like that idea. We like our $400 check. But I'm just looking at the big picture, because you said how much money do we need, and then we give away we refund $3 million, and then we get I'm sorry, that's right, with a B, and then we get charged higher rates. So I feel like we stuck in this trick bag.
Right. Well, we estimated that we'd need less money than we thought we ultimately did. When the law changed, we had to change our estimate. I mean, it's really that simple. And in terms of the statute provides that if we're in a situation where our assets exceed our liabilities by 120%, that anything over 120, by statute we have to give it back.
Right.
We don't have a choice. So we couldn't hang on to it.
And that was my question. In your inner circles, when you're talking about this kind of stuff, do you ever talk about holding on to it? That's my question. She's saying, yes, we do. So
our board does, the Department of Insurance and Financial Services does. It was, as you can well imagine, a lengthy conversation, but there are some statutory limitations that we have to fit.
Well, I mean, we're law, right? I mean, but we're lawmakers. If that's something that you think needs to be changed and stuff, I don't know. I just know that sometimes regular consumers don't like to be given something and you take it away as soon as you get it, and you feel like you're in this quick trick bag.
Let me also say this, though,
Yeah.
to follow up on that. When we have a surplus that's higher than that 120, we have to give it all back right then. If there's a deficit, by statute, we have to take our time. Deficits come back slowly. We have to amortize it by no less than 15 years.
years.
But the surplus, that happens right away. So
I have one final question, Madam Chair. So this gets confusing. Even with my son, we looking at our insurance, we're trying to understand. So when you get the unlimited doesn't change the 55% of the reimbursement. Because some people think I chose unlimited, so that means I get 100%. I'm like, I'm not sure that's how that works, right? So if you could just explain that a little bit more, and then I'm done. Thank you.
Sure. So when you purchase unlimited PIP benefits, they're unlimited based on a statute. So you still, it's only 3 years of work loss under the statute. So you get those 3 years, but you don't get unlimited work loss because the statute does limit it. The other benefit levels that you can choose do limit the amount, the actual the numerical amount that you could receive. 250,000, 500,000. Unlimited means that for your lifetime, you will receive the benefits that the statute provides.
We have a lot of questions. You guys are popular today, but I would like to remind committee members that we will probably be ending questions probably about 20 after, so we may have to have you guys come back. But
We're happy to do so.
But we're going to continue with the questions.
We'll bring our long slides up.
Thank you. We're going to continue with the questions, and we're going to do as many as we can in the next 8 minutes. Representative McFall.
Thank you, Madam Chair. And thank you guys for being here today. This is extremely complicated, and I'm relatively new to a lot of this, so I appreciate you guys coming here. But one of the questions I do have is, do people who select the $500 or the $250,000, do they get their claims covered?
No,
Okay.
we don't have any reimbursement obligation.
Okay, so that's only under the unlimited?
Only under the unlimited, and
Okay.
only after the statutory retention amount is met. So the $635 is paid by the insurance company
Right.
first, and then after that, although they continue to handle, the insurance company continues to handle the claim, we bear the financial responsibility.
Okay, all right. Thank you very much.
Representative Scott.
Thank you, Chair, and thank you so much for your presentation. You mentioned earlier about your board members. Who exactly are they, and how many are on the board?
We have 5 board members. The companies are actually appointed by the Department of Insurance, and then the companies choose an individual to represent them at that meeting.
You have a list of the names, or is that something you don't share, or?
I'm trying to remember if I think the list of companies is on our website.
Yeah.
Oh, but not the specific people
But not
from
the
those
specific people,
companies.
because the companies themselves get to choose
Oh.
who's representing them.
I see. Okay. Another, if that's okay. So last year, people who purchased less than the unlimited PIP coverage, did they pay an assessment to MCCA?
They don't pay the MCCA portion. They pay the deficit. Everybody. So currently, it would be the $48 that
Okay.
everyone pays.
Okay. All right. Do other states have entities like the MCCA?
No.
Okay.
We are unique.
You're
because
unique.
Michigan is unique.
Absolutely, yeah. So, one more if you don't mind. So, after 50 years of existence, do you still think it's relevant for the state of Michigan?
I believe you're asking, is it relevant to have unlimited no-fault coverage? Is that?
Well, is it a good policy to have this, is what I'm asking.
Personally, I say yes, and I recommend everyone gets the unlimited benefits because they're amazing benefits. For the amount that you're paying in terms of, when you think of the different insurance coverages that you have to pay throughout your life, the amount that you're paying for this unlimited lifetime medical benefit
Right.
is quite low. And there is no other state in the country where you can even attempt to purchase such a thing.
Okay, all right, thank you.
Thank you, Rep. Scott. Rep. Grant.
All right. I had one question, and then people asked other questions, and I have more questions. So I know we're on a time crunch. First, I want to start with just two clarifying questions, really quick questions. In your explanation of the work that you do, for me, I know that you all would say you don't do direct care, but as you talk about the explanation of the work and your involvement, some people may argue that it sounds pretty close. Can you explain to me why you would say you don't do direct care? What's the difference between what you do?
So we don't actually handle the claim. We are often after the fact. There's a fairly long tail before we see, when an insurance company asks us to reimburse a payment.
Okay.
It is often a long time after the payment has been made, which is even longer after the care has been received.
Okay, that's great, because one of my follow-up questions is, it has been stated to me quite often that people have been told by their adjuster that the adjuster can't pay out a claim because MCCA will not pre-approve that amount. So that is almost in direct contradiction to what you've just stated.
So I have been, I've worked on MCCA claims for my entire career as a lawyer, so a little over 20 years. I've actually been at the MCCA for the last 5, and one of the things that has always surprised me the most is how often we are the boogeyman. It's the MCCA's fault, and how often when I go into court, a judge will be like, "Oh my God, you exist," and we really try to get the information out there so that people can understand who we are,
who you are and what you do. So how do we get to that? Because if someone is saying, "Oh, this is what you deserve," would love to give it to you in this very hard time of your life, but MCCA just won't approve it. How do we get to that? Because we're leaving people in this purgatory of and not receiving what they need.
Absolutely. So Joe's cell phone number?
I'm happy to give it out.
Over the last 5 years particularly, we really have tried to increase the amount of information that we're providing to those that we see. Right. So
I'm more so asking in legislation. I understand that, but that doesn't solve people's really important problem. How through legislation or process do we not allow adjusters to scapegoat themselves from providing what people really need and what they qualify for by saying that you won't approve it? Because we don't want you to be the bad guy if you're not the bad guy. So how can I help?
I think that I really appreciate that question.
And we can talk about it later if you need to think about
We're
it.
gonna need to talk about
But I would
that
love
later.
an answer to how we get to it.
But I also understand that, I'm not a frontline claims adjuster. And I understand that sometimes in that position you may need a scapegoat.
I think we need a MCCA round 2.
And I have just one more question. I'm sorry.
And it may have to be our last one because of time.
Okay, I'm sorry. And just one more clarifying question. In the fund consists of the insurer's money or the driver's money?
So, yeah, go ahead.
So we assess insurance companies. The insurance companies, in turn, are entitled to, and they do, pass along the charge that we give to them to their drivers and include that in their premium.
So the fund that you hold insures dollars or drivers' dollars?
Well, the money comes from insurance companies, but it's initially paid out
By the driver.
by the drivers.
And then, so my question, I know you noted the companies on your board, they're all insurance companies. If it's the driver's dollars, is there any representation on your team that would have their interest in mind?
I would say this, we all have their interest in mind. I mean, we're trying to make sure that we have enough money to fund their claims.
But anyone that has a specific, not like a muddled interest through through other lenses, but just a pure, regular person on the road that is there to represent that voice.
What we have is a financial obligation, and
Okay.
the persons that are, or the companies that are responsible to meet that financial obligation are the persons that sit on our board.
Okay, thank you.
Thank you. And I'm going to leave the last question. Unfortunately, we're going to end with Rep. Rogers. That's our last question.
Thank you so much, Chair. And this is really technical, so you might have to get back to us, and I'm happy to email it too. But the National Association of Insurance Commissions, NAIC, publishes an annual data profit sharing report called the Report on Profitability. The interesting thing is that year after year after year, Michigan is like a black box. We don't have information. And there's an asterisk year after year after year. And I'm going to read this just so you have it, but I'll email it too. The profit reported for Michigan's passenger and commercial auto liability lines are not meaningful because of data reporting anomalies arising from the data related to the MCCA. Can you talk about what those anomalies are?
I don't have any idea what that means.
No.
I can email it to you. Maybe you can look into it. Thank you so much.
Okay, thank you. And I know this has been extremely interesting. I hope the committee got a lot out of this. We will bring MCCA back, so if you have additional questions, you can email my office. I will make sure that Joseph gets it. We want to thank you so much, Joseph, and we want to thank you, KJ. There we go. For coming for this presentation. So I need a motion to excuse Rep. Harris from this meeting. I see Rep. Oh, okay. Rep. Zop raised his hand. He moves to excuse. No, Breen's on Zoom. Okay. So we move to excuse Rep. Harris. Hearing no objections, Rep. Harris is excused. Seeing no more business before this committee, and you think this is gonna even get deeper before I'm done. I need a motion. I see Rep. Fitzgerald and Rep. Young motion to adjourn. Hearing no objections, this meeting is adjourned.